get started, Akshant, I'm going to start by talking to you about the decision on why to IPO. And in the case of Zomato, the decision was on account of COVID. I remember Dippy saying very clearly that it was a desperate contingency plan because COVID had impacted your business so badly that you had no choice but to raise money, and you weren't even worried about the kind of subscription that you would get. So take us through that time on the decision of why IPOing and when you finally decided to go about it.
Yeah, thank you, Shereen. Yeah, so for us, I think it started with that. During COVID, around July 21, our business had shrunk meaningfully in the COVID times, and it was still loss-making. And fundraising from private markets was not an option at that time because no one knew how the world and our business will come out of COVID. And hence, I think that is when, over a lunch break, I remember us talking about, okay, should we go public? Maybe it's easier.
Over a lunch break, you decided, should we go public?
Maybe it's easier.
Is that how things happen at Zomato, over lunch break?
That's how this conversation happened with Dipinder asking me that, look, should we go public? Maybe it's easier to raise money from public market investors. And
because the private market had dried up.
Yes. And, of course, there's been no history of, before us, a company like us, which is loss-making, raising money in public markets. So, my first reaction was like, look, this is even going to be harder than raising money from private markets. But I think nevertheless, since we had no option or weren't seeing much traction on the private side, we said, look, let's start the work, let's see where we go. And I think luckily for us, by the time we were prepared to go public, the sentiment had changed, business had bounced back. And in fact, before we went public, we raised a lot of capital from private investors, right? So a lot of things changed. So we don't know, had things not changed, we still don't know whether we would have made it. But yeah, I mean, that's how it started. And I think I'm sure for different companies, triggers are different, right? I think there is no one good reason to go public. It could also be just like it unlocks energy in the organization. That could be a reason to go public as well. But in our case, that was where it started from.
But Alok, let's talk to you because, what we've seen in the case of Zomato, for instance, been around for 15 years and then the decision to actually IPO. In your case, 17 years, you've been around for 17 years and then the decision to IPO. And in fact, the first attempt at IPOing didn't go as per plan. You pulled back and then decided to go ahead when the market sort of came back to some semblance of normalcy.
Yeah, absolutely. So, Shereen, I think one similarity is we attempted to raise a private round back in 2018-19, didn't go as per plan. And we said, look, let's make the company profitable. So we worked for the next 12 months to make the company profitable. First quarter of the 2020 calendar year, just before COVID, we turned profitable and COVID arrived. And, we took a decision saying, look, this is a time when most OTAs are going to play defense. It's time to play offense. And you might remember, but we were refunding people left, right, and center, even though money wasn't coming from airlines.
And you didn't lay off people either.
We didn't lay off anyone. We actually hired more people in the team in our customer support because people are not picking up calls at airlines and OTAs in those days. And we just said, look, if we actually do this right and things do work out, in the worst case, all OTAs are dead anyway. But if things work out, maybe the karma we earn at this point, will come back in a big way. And it did. So when things opened up...
You were accumulating good karma, is it?
When things did open up, FY21 for us was actually bigger than FY20. And in the COVID year, we were profitable. And that gave us immense confidence to say that, look, the future is going to be only better because travel hasn't opened up yet. The second wave had still not arrived. And we said, let's just... start working towards that right away. So I think sometime in February, March 21, we had a board meeting. We just acquired, in fact, we made two acquisitions during COVID, Confirm Ticket and Abhibus. And during that board discussion, we said, perhaps we should go public. And, Zomato's filing was one big inspiration for us as well, saying that, look, this is a time when a lot of companies would not think that going public is what you'd be working on because we were all sitting on Zoom calls and working all day, right? So we did. But we said, it's perhaps the best time, right? And we filed our first filing, back in late 2021. We got probably 6 months delayed because by the time, we got the approval, the market had started correcting, right? And it was not the best time to go. And our numbers were looking better quarter on quarter. So we said, fair enough, let's wait. And for 2 years, we just executed, grew our revenue and profits. We were 6 times of pre-COVID last year. And that's the time when we said, maybe it's time to pull the trigger now.
So karma did work in many ways than one. Alok, let me come to you now. What gave you the confidence at Policybazaar, you and Yashish, to actually decide on going IPO?
So our reasons were very different, Shereen. I mean, we didn't need the money per se. Even on the day of IPO, we had almost 70% of the money that we raised as a private company is still in the bank. But as you rightly mentioned, it's not just about the money raised. It can also be about, sort of signaling to the market that companies come of age. The business model is more established now, so it's become more predictable. It becomes a liquidation event for your investors, for your employees. But I'd just like to add one very different flavor to it because, as founders, and this is not something which a lot of people can appreciate. As founders, this is the only thing we have. It's a 0-1 for founders, right? For investors, usually an option. You can sell tomorrow, you can invest in 5 other things, but founders के लिए तो 0-1 ही होता है यार, कुछ है ही नहीं और, right? So if we do not have confidence in the survivability of this model, then we have wasted 15-20 years of our life. So there is no option for founders but to make the business model stronger and stronger with time.
The breadth and the depth of India's startup ecosystem, it's changed dramatically in the last 20 years, as I pointed out. The private sector and the private market enthusiasm has been waning in the last few years, and we've seen that funding winter, which now seems to be much more sort of structural in nature, at least as of now. And then the ability for the public markets to understand and perhaps appreciate new age business models more or better, especially after the likes of Zomato have gone public. What do you attribute to the kind of confidence that we're now seeing in these stories from a Dalal Street perspective?
See, from a market perspective, new age businesses growth is never the question. Everybody knows, see, whenever any investor invests into India, essentially it's for significant growth. And when you compare new age businesses versus anything else, which we call traditional companies listed, the growth is way superior. The question was always around profitability.
Yeah.
It was a question which was asked until 2022, 2023, that these companies which are growing at this pace, at what stage they will actually deliver profit. And I think once some of the bigger ones, few of them sitting here, have listed and delivered, demonstrated it, I think that's where the whole market appreciation for the businesses have happened. And typically all these cycles start with the larger companies, which are you are more familiar with, right? Even whether it's Zomato or Policybazaar, even before listed, you are familiar with what the company is. So once that has happened, then it sort of trickled down to the smaller businesses also, so that you have a very solid business plan. Now, whether you're on a consumer side or enterprise side, people believe that, okay, these businesses at certain point in times can become profitable.
And will deliver returns.
And they will deliver. So that confidence has come back, and it's not them, other companies also have
pricing. Pricing has made a big
Absolutely.
difference in terms of how these issues are being priced today.
Yes. So obviously, see, when you are only looking at growth at that point of time, the matrices used to be different. When bottom line starts happening, you like it or not, people start looking at the bottom line numbers, which is EBITDA and all these days, right? That's the change of thought. But I think importantly, markets, if you see in terms of the absolute valuation perspective, it is still very strong. So it's not as if that you change so the valuation comes off. It's just that you are getting a very different multiple which you trade at, which most other businesses don't get in the country. So I think markets' ability to understand that a lot of these businesses have serious value, and these businesses are going to last for much longer than what you would have thought pre-COVID is really the confidence booster which is there. And obviously you have phenomenal liquidity in the domestic market. So everybody, whether somebody was invested in an unlisted security or the mutual fund, everybody has got that confidence. So you're going to see more and more of this happening.
So 2024, an even bigger blockbuster year in terms of IPOs?
Next 12 months more than what you have seen in the last 12 months, for sure.
For sure. Well, let's talk about how life has changed now as far as all of you post an IPO. And Akshant, I'm going to start by talking to you. You know, as Kunur was pointing out, as far as the private markets were concerned, GMV was enough, and now suddenly you have to talk about EBITDA, and that becomes the metric that is going to be most watched and most scrutinized. Now, you know, it took you, how many quarters? I was taking a look at that time to profit since listing, about 8 quarters. What did you do differently? Because we've also gone through this mindset, especially through the private market boom, where easy money was easy to come by, where nobody was talking about profitability. It was growth at any cost. Suddenly, you're now talking about growth and profitability. For that mindset shift to happen, for that change and that transition to take place, what were some of the tough decisions that had to be taken on the back end?
So I think in our case, it wasn't that because we became public, we had to shift focus on profitability. In fact, when we went public, we were a loss-making business with very little visibility on profitability, and that's how we sold our IPO to public market investors. And I think they were pretty okay with the profile of our business, the way it was. Right? So I think in our case, the business matured in those 2-3 years to a point where it became profitable, right? And given that, business like ours are usually new businesses and people don't know at what point they mature. Even we were not sure of how long it will take to get to that point, right? And it happened in 2 years after IPO, but I don't think
But was there pressure, for instance, to ensure that you move faster to profitability as opposed to had you not listed?
No, I don't think so. I think public market investors want and appreciate clarity, right, on how they should think about this business in the next 3, 4, 5 years. And as long as you're transparent and you give that direction and clarity, right, they're willing to underwrite the business basis that information, right? So I don't think in our case it was like because we were public, we had to get to profitability. I think we just sort of focused on keep doing the business, and I think it got to a point where it started becoming profitable.
So again, it was a natural progression. You're saying
Yes.
It wasn't anything specific that you decided to do after listing to turn profitable easier, faster.
That's right, and same is true for the other business that we acquired, Blinkit, right?
Blinkit,
it
yeah.
was a loss-making business which we acquired while we were public, right? And we got.
And there was a lot of backlash.
I mean, I think backlash is more in media. That transaction required a shareholder approval, and we got 98% of our shareholders to vote for it, right? So, I think a lot of this perception around, backlash is also, I think, basis what you read in the press. But I think shareholders were supportive. They were, skeptical of how this business will shape up when the food delivery business itself was still young, right? But if you look at that journey now, that business also matured way in much shorter time than what it took food delivery to get to that point.
Even ahead of your own expectations.
Yes. So I think we are all in businesses like these, right, where you're trying to disrupt the status quo. And when you're doing that while being public, it's going to be slightly hard to make the business predictable. And I think that doesn't change now. That doesn't change 2 years out. I think that will be the nature of this kind of business. But
you're saying that there is an appreciation and an understanding of the unpredictability of the bets that you make as long as you're transparent in communication, but you also have the track record of execution.
That of course helps any business. I think with time people will, underwrite. When you underwrite a business, you're also underwriting the management team, and therefore track record over time helps. Right? But I think key is communication, right? Because on how clearly are you communicating and making sure that you as a company is leading the narrative on your business rather than people conjecturing on what it could be, given that our businesses could take many paths.
Now, decision, actually it's not even a decision yet, but a thought that Policybazaar has put forward in the possibility of entering the healthcare space. We don't know in what shape or form it's likely to be, but that has seen the stock markets hammer your stock down consecutively for the last 3 trading sessions. Now, as a founder, do you believe that if you're a listed entity, does that weigh in on your ability to take risks and your ability to diversify?
Okay, so I'll just mention 2-3 things, very different perspectives. See, typically businesses can be broadly classified into 2 different types of businesses. One is where you build a factory or a hotel or some asset. You spend 3 years, 5 years investing, you get some loan, and then you start to monetize. All the businesses that you are seeing here, we are digital businesses where you have to invest into 2 things only, marketing and tech broadly.
Yeah.
And because these are P&L expenses, every year you see the loss. So what we seem to be doing is that we are pushing out our profits into future by investing today. And the more you invest, that time frame may be even longer.
So you're saying the lack of profitability is by design at this point in time? Or when
profitability is a choice. I mean, you can have it today, you can have it after 5 years. If it helps you become stronger, and if it helps grow faster, it's a call that management team have to take at some point, right? Typically, like you mentioned about growth and profits, I actually think of growth, scale, and profits.
Right.
where growth is imperative, but scale gives the model that much more strength. And especially in a business like ours, where you talk to insurance companies, you have to have that scale to get the right sort of product or process innovation from them also, right? So we start to think of very, very long term from that perspective. Now, what typically happens in a public market versus private markets is private investors usually have an 8 to 10 year time frame, a lot of time depending on the fund time frames. Public markets usually will not have that long. It can be 3 months, it can be at the best 3-5 years, at the best, right? Second, private investors, you get to interact a lot. So they can go deep into data, they can go deep into strategy discussion with you. Public markets usually get 1 hour per quarter at the best. So again, the understanding of your business has to be shallow by design. So, as founders, as management team, you have to do what is right for the business. And our time frame may be 20 years, which is not the time frame that any public market investor is seeing. But if it makes sense for the problem that you're trying to solve, you still do the right things. Like he mentioned about Blinkit, just around the IPO time, we started 3 new initiatives, all 3 loss-making. We started expanding into different cities for call center, for physical meetings, setting up the claim team. Everything is, technically a cost. But that is the right thing to do, and that's enabled us to grow faster today.
How do you see potential challenges? And let me address that from the lens of regulatory challenges, because those are the ones that are not in your control. To Alok's point, that you can only control what you can control, and you have no control on things like regulations changing. Now, for instance, you talked about Blinkit, and that is slated to be the next big thing as far as the Zomato growth story is concerned. You suddenly have the government saying that, look, quick commerce is a problem. We need to look at how quick commerce is operating. You need to work with the Kirana stores. Do we need to bring in regulations specifically or not? Complaints have gone into various ministries at this point in time from various associations. When something like that happens, how do you deal with it? How do you cope with it? How much of a risk or a threat is it to your business?
I think it's part of building a large business. I think same thing happened with the food delivery business maybe 3 years ago around the time of our IPO. I mean, suddenly the entire country, the political system, the regulatory system discovers a new business, right? And I think it's only fair that they want to appreciate it more. And we've been, last 2-3 years that has happened for the food delivery business, where, now there is finally appreciation of how that business works and helps the country and the small restaurants and the delivery partners across various departments of the government. And I think we're totally open to engaging with the government and regulators on going through a similar journey with the quick commerce business. And I think it's a duty to do that and to make sure we take any feedback that comes out of that process and
is the discussion and dialogue ongoing?
It always is. I think, since we've become public, I think we've become better at it. And we're trying to sort of engage more and more with everyone.
Kunur, for people who, they've already IPO'd and we've heard from them on their own experiences. But for those who are looking at the possibility of IPOing, haven't filed their papers yet, what should they be mindful of? What should they look at? What should they consider? What should they weigh in on?
So I think the first point is the reason which we started this discussion is the why, right? An IPO is not because suddenly you're seeing some crazy markets and there are a lot of deals happening. That's never the starting point to do. I think there is...
Could be a temptation for many, though.
It is a temptation, but you need to take stock of the business, whether you are ready to go to public market, you like it or not, you need to talk to investors, give sort of communications in terms of what you're going to do, quarterly disclosures, etc. And, private companies, depending on the stage you are not always used to doing that. So I think those things are important to answer. Yes, sometimes it has to be to do with your stakeholders who need an exit, then for that you do that. So I think the first thing you need to do is the why. We always think that in a good company, there will always be a market. You can have a valuation up or down, but there's always a market for a good company. So yes, I think once you know the why, I think then it's a question of preparing yourself, getting the house in order, because in public market, it's not just the founder, multiple things need below, finance, secretary have to get used to the process. And then I think there is this overhang thing that once you go to public, there's a lot of stuff to do. It's not actually. It's pretty streamlined in terms of what you're supposed to do. Importantly, I think what a lot of people are looking to see is what is your journey, what is your profitability or the path to profitability is a question which everybody asks. And so long as you have a very clear answer which is explainable, right, whether it's now or 1 year, 2 years later, I think then there is definitely a reason for you to go. it is a capital form which is available quickly after that. If your business needs more capital later on, follow-on offerings are much quicker than an IPO process.
Right.
So it helps you a lot, right? And the private capital market right now is not in the way it used to be 4 years ago. So the public market is a lot more sort of buoyant, and it is going to be like
Absolutely.
that for a while.
You know, throw some numbers for us, Akshant. How much of the growth that you anticipate in the future is likely to be driven by inorganic growth? You know, Blinkit, what you saw with Paytm, the recent deal that you've done to get into the whole experiences space, and Vijay is here as well. Will M&A drive future growth, and what kind of capital allocation are you likely to make on account of that?
So it's very hard to say that unless you know what you want to do in future. I mean, at this point, we don't know if there is, or don't know of any other business that we want to build beyond the 4 businesses that we have. And if there's an idea, then I think there's always this build versus buy, even in this whole...
Is it easier to buy versus build today?
It depends. Like, I mean, food delivery we built without buying anything, right? In case of District, we bought Paytm's business because we were building it for a while and realized how hard it is to scale the business given the market dynamics. So M&A made sense. In case of Blinkit, M&A made sense because you need a team that is experienced in retail market in India, and we had no experience in-house. So I think it's very context-driven. I don't think we are... I mean, we have to be objective about taking these calls depending on the context.
Alok?
I think it depends on you know, what your core competence is and what are you buying. I mean, in our case, we made a couple of acquisitions where you know, was largely about either strengthening an existing vertical or like adding a new vertical to our business. And I think the preference usually is that if we can build it right, because there's a lot of variables that you can't control that you bring in when you do an acquisition, right? And then
the integration challenges.
The integration, the culture, the technology integration, etc. But I think companies like us tend to typically want to do everything organically as a preference, and we'll only acquire when we find something really exciting out there, which we think can add you know, value to what we do.
But Alok, do you see M&A as being a growth driver for the future?
Not for us. Our DNA is more built, as you know, Alok also said. We have rarely ever invested into anything, and it may take time, but it gives so much more strength to the whole business if you build it organically within the company. So, and it gives chance to the internal team to also grow up and take on larger responsibilities. So, we are very big fans of building in-house.
I mean, what is the headroom? People are calling Blinkit the Amazon moment for India's internet. How would you describe it, and what do you believe could be the potential headroom for growth?
See, Shereen, honestly, no one knows, including us, right? I mean, most of these businesses are built on latent demand. These are not obvious businesses or problem areas that you're trying to address where you can come up with a top-down size of the business, right? It's not like quick commerce created something new. There was a commerce going on in the country, and it's a new channel which made it more convenient. E-commerce did that to the country 15 years ago, and therefore it grew. Food delivery did that, made it easier to consume restaurant food. So I don't at least we don't obsess about trying to even spend time on how big this could be, because we'll discover as we go along and we'll sort of
but you do have to make choices in terms of how you intend to build this out further, just given the current demand that you're seeing and the expectation of demand moving higher from here on. So what does that mean in terms of dark stores? What does it mean in terms of future investments into Blinkit, etc.?
Yeah, so I think our job is to respond to what we are seeing on the ground, and rather than actually worry about 5-10 years out. And today on the quick commerce business, we are seeing, I mean, the way we're trying to therefore answer that question for ourselves is to go to smaller cities and open a store and see whether there's a product market fit for this business in those markets or not, right? So we started with the top 4 or 5 cities. Then we said, okay, let's launch the top 15th city in the country and see if it works there. You know, it did well. Then we're like, well, let's open the 40th largest city in this country and see if it works there. So we're on that journey right now to see how deep this market is. And, you know, one is like whether this works in a city or not. And second question is, okay, within a city, how large this market is, right? Because if you, let's say, launch quick commerce in Dehradun, does it work only in 1 location or 5 locations or 10 locations, right? So I think all of this, at least in quick commerce, for us is something which we are still discovering. In food delivery, I think it's played out now. We are now, say, in 750 cities. We know it works everywhere. In those cities, all of those cities are profitable today, are growing well. So I think more predictable in terms of how growth will shape up in that business from here. But quick commerce, I think, is still very early in terms of how large, in terms of us having a point of view on how large this opportunity can be.